All right, so today we're going to jump into a DeFi analysis from a project called VyFi. For many of you listeners and viewers, if you've been watching, I know a lot of you are in the Cardano space. You've been asking for some updates on that. Today we're going to dive into that a little deeper. My name is Paul Barron. Welcome back to TechPath. Joining me today is Stephen Ward, who's the director and founder of VyFi. Great to have you on the show.
Thanks so much for having me, Paul.
Excellent.
It's a pleasure
So
being here.
Stephen, where are you dialing in from today?
Today I'm actually dialing in from Italy. At the moment I'm living in a town called Padova in north, 30 kilometers west of Venice.
Very nice. I like it. It seems like the crypto community in its entirety, we get people from all over the world, and it seems there's just so many decentralized teams today. It almost this whole element of not only crypto, but just what's happening with, obviously the pandemic has really kind of changed workplace
Absolutely,
scenarios.
the modern workplace. And I mean, it just is evidence to that. I was working in Australia. That's of course where the business started. I had to get out of Australia because I had to sort of be able to travel for work. And then from there, I've got 2 team members in Australia. We've got 4 team members in America. We've got 6 team members in South America and 3 in Europe. So
wow,
there we are.
Great.
Good luck having an office.
You kind of have to go where the talent is. Stephen, let's get into
Absolutely.
a little bit about VyFi itself. Give us the overview of it, how it's connected to the Cardano system, and what you guys are trying to do.
Absolutely. So we sort of began this project with the idea of wanting to bring new people into the space of DeFi, realizing what an opportunity this sort of brings to the world and to be able to empower people to manage their own finances. We wanted to think of a new and creative way in which we could onboard, essentially. We realized early on, and still today, one of the biggest barriers to entry is how complex and how difficult these systems are to engage with on initial confrontation. And a lot of people on the initial confrontation are scared away. They don't want to engage. They're worried about what's going to happen to their money. So we're essentially focused on trying to break down those barriers to entry for new people coming onto the scene.
I was looking at your website, just in general for people, yield farming. You've got this very cool tool that I've learned about through your white paper, auto harvesting, be your own bank, which I think in the DeFi space, we see a lot of evolution in that area. I'm kind of curious. I want your opinion on just the aspect of where DeFi currently sits today in the banking ecosystem. Do you feel like this is still a couple of years away before we see mass adoption? What are your thoughts on that?
Yeah. Look, I would break that down into 2 facets. First of all is the proliferation of money within DeFi itself. And secondly is where does that money come from? So if we look at the total size of the DeFi market, and it changes on a day-to-day basis, you can check it on DeFi, but we've essentially got a circumstance where we've got probably around 400 billion. Sometimes we navigate ourselves up to 1 trillion on really strong months. If you look at just any bank, one bank will likely have more than $1 trillion in assets, right? So where are we in terms of classical banking? Essentially not very far. We've got a very long way to go. In fact, all of crypto is about the size of Amazon currently. So within that, I see it as a truck that's imminently coming, right? There's this truck of money that's on its way because the general opinion held towards those institutions is poor. And when people start to realize that an alternative already exists, people are going to start to explore what that alternative is, whether that is with all of their money or a portion of their money, just to go figure this new world out. This world is lacking bridges right now. That's the biggest issue that we have. That's why we don't have more people engaging with it already, because they don't know what it means to engage with it, and they don't know how to begin engaging with it. So we want to try to give them pathways to enter this world in a manner that's as safely as possible. Because once you realize you can unbank yourself, oh my God.
Yeah, it gets very mind-boggling, I think, for a lot of people. I know when we talk to general people just in, about crypto at its peak and understanding the token aspect of investing, many people are sure they understand Bitcoin and many of the major blue chip altcoins, but when you get into DeFi, things get a little bit more complicated because of the onboarding aspect how it rolls into it. You guys have done something though
Mm-hmm.
that I think is unique in the aspect of taking a lot of your hedge fund background and move that expertise into something you call auto harvesting. Explain that for me.
Mm-hmm. Yeah, absolutely. So essentially, I've been running a hedge fund in this area now for about a year and a half. And within that, we've got some proprietary strategies, I say you'd call it. And I would say any hedge fund in the world does have those strategies that they use and they adapt for themselves and for their clientele. We're essentially automating those strategies and we're getting our AI system to optimize them. And whilst our AI system optimizes them, we're allowing our user base to then invest in those strategies through our platform. And
I was just
look,
looking at
there it
the,
is. It's
yeah, I
beautiful.
was looking at your auto harvester diagram here on using a neural net.
There it
How
is.
does that work? Explain.
Absolutely. So our neural net is essentially being fed the strategy, right? The strategy that I've been adopting. This strategy is then optimized with the data that's collected by the neural net. So the neural net takes in data from external swaps and internal swaps. They're the dotted lines, and then also external exchanges. Now, this data that's taken in is then munged and aggregated, and it's done all the calculations are spread across it, and then that neural net data is used to manage those farms internally and externally, i.e. the farms that are held or the liquidity that's held on our platform and the
Right.
liquidity that's held off platform. And something that's really important to notice, particularly when you're dealing with risk, right? There is a risk component involved in managing monies across multiple platforms. If you put all your money in one space, then you have the risk that that money can disappear if there's a fault in that space.
For sure. Yeah.
That includes ourselves, right? So when we're managing other people's money in an auto harvester, we're not going to be putting all their money just on our platform. That's not appropriate risk management. So within this, we're going to be able to explore multiple platforms, and then we're aggregating that yield or the money that we make with people's liquidity, and we're servicing it back to the user base of our platform.
Got it. I like it, the fact that I've seen very few of these kinds of systems applied with, AI, getting into neural nets and understand that. We've talked about on our show many times. We've talked about bot trading, examples of that. Where it is kind of set it and forget it. But an AI aspect, especially when you get into neural net training, how to do something, and it gets better and better with every trade. Does your neural net and your AI, is that essentially what it's doing right now?
Yeah, essentially. So what our AI is principally focused on is, I'll tell you, when we've got a liquidity pool, right? A liquidity pool contains two tokens. We'll keep it two simple tokens. We've got USD and Bitcoin.
Right.
Now, we have to supply both of these tokens, so we hold both USD and Bitcoin risk. If the value of Bitcoin goes down, that means people are selling Bitcoin. If people are selling Bitcoin, that means in your liquidity pool, because people trade based on your liquidity, you're gaining Bitcoin. That means you're gaining the token that's losing value.
Exactly.
In fact, when you put tokens into a liquidity pool, you'll always gain the token that's losing the most value. That's called impermanence risk. And that's what kills people and newcomers when they start with DeFi. Now, this impermanence risk is actually a numerical score that can be based off of a risk ratio between these two tokens, right? Both tokens have a volatility. Based off of that volatility, you can find a risk ratio between them, and using that risk ratio, you can calculate a numerical score for impermanent risk. Now, if we take that numerical score for impermanence risk between two tokens, and then we find it between 200 tokens, 1,000 tokens, as many token pairs as you can find, we can essentially build a map of risk ratios between pairs of coins. Now, all we have to do is we have to compare the map of that risk ratio against the current yield being offered across different farms on multiple platforms for holding that liquidity pair.
Gotcha. Okay.
And then all we do is we optimize between yield and risk ratios. Yield, so what's the risk ratio for this coin? Where am I getting the best yield? Risk ratio for this coin, where am I getting the best yield?
Right.
And then we place risk boundaries around certain tokens based on its historic performance. So we can stratify into low risk pools, medium risk pools, high risk pools. I did it the wrong way around. Should be low to high. And then we're going to have stable risk as well. So, which is just holding mostly stables. So that's the core sort of design of our neural net. It's going to be running this optimization of yield versus impermanent risk against risk ratios that have been provided.
So all of this, of course,
maths.
within the all of this in, of course, in unison with what's happening with Cardano, the rollout of Alonzo. Was that kind of, now explain to me a little bit, but before we get into that, I want to talk about the Vybar, because essentially what's going to happen here in terms of the yield aspects, it goes into your Vybar. Explain how that works. I was looking at that on your on your white paper here.
Absolutely. So classically, a hedge fund, when they earn profits, they take profits for themselves, and then they give 80% of the income earned to their client base, right? In our circumstance, what we're doing is we're actually delivering the income that's earned, and we're swapping it for VyFi, which means on a functional basis, we're taking the income and we're depositing it into the VyFi liquidity pool, which increases the value of our token. And then we're distributing it to our user base, those that hold our VyFi token. They stake it at our bar, and then they naturally earn more VyFi just for holding VyFi, which makes us a deflationary coin.
Exactly, which is a key element with that, within that. Now, while all of this was happening with Alonzo, the development, obviously, we know with what's happening with Cardano and Charles Hoskins, and just kind of the evolution of where Alonzo Purple has kind of gone. You guys did some interesting things with your NFT vaults. Explain how that works. I wanted to jump to that page.
Yeah, absolutely. So our NFT vaults so we gave every participant of our ICO a free NFT. And then we realized that there was a real opportunity and that there wasn't any real methods for farming multiple currencies on the Cardano ecosystem, even though multiple currencies existed. So we basically took the initiative and turned our NFT into a stakeable NFT that earns you tokens from across the Cardano ecosystem.
Very cool.
So at the moment, you can earn Flick, you can earn, VyFi, of course, Cardax, Flick, and MinSwap.
Yep, I'm seeing different different levels of stake level right here. Okay, very cool on total value locked.
And if you go to the top, at the very top of the data page, you'll see there's a total staked of 1.1 million, 1.1 million USD worth of our NFTs. So they've got a current, what is it? The current average NFT price is 722 ADA per NFT.
Excellent, excellent. So with that, you guys are one of the leading, essentially one of the leading platforms, DeFi platforms within the Cardano ecosystem. What are you finding in terms of users and just in general kind of acceptance of what VyFi is trying to do as a DeFi platform? Because you are taking a little bit of a different, strategy, a different approach than what a lot of traditional DeFis are doing. What has been the acceptance that you've seen from the market?
I found it's been incredible. Particularly in a community like the Cardano community, where they're very interested in new tech. They're very focused on making sure things work correctly, things work safely, and that new tech is being explored. So I think we're in a really nice environment to be able to push the ideas that we're going for.
Yeah.
The other thing is that it's allowed us to stand out as well, working within the Cardano ecosystem. So we're doing something that's really original and very brand new. But if we just launched as another ERC20, we could very easily get drowned out by every project around us. Right?
Yeah, for sure.
Now, it's made the work a lot harder launching on Cardano, but it's given us the advantage of working in a language that's safer, and it's also given us the advantage of working in a community that believes in trying new things. So at least more so than other blockchains, which are set in their ways, particularly in terms of DeFi. It's hard to break into the Uniswap.
Yeah, you brought up something there that I've often wondered, and I haven't had a chance to talk to a team that really is developing on a heavy level with Haskell, but are you finding it easy, difficult, moderate to find developers and kind of just the technical aspects of working within Haskell to develop on what you guys are trying to do?
Yeah, that's the fun part. So in the early days, it was a lot harder to find developers. I'm talking back in April.
Yep.
That's when we sort of really started fleshing out our team. We've got a team now of a total, what are our engineers totals? 9 engineers now. So we've been able to find all the skills required. It was a bit of a hard task, but we got there. I don't envy any team trying to build now, trying to find a whole brand new team now. A lot of the Haskell teams around the world have been taken. It's a crowded market. I'll tell you what, there aren't many Haskell engineers and there's a lot of demand. But what has been the most incredible part, and this is what I like most about all of it, is that it's allowed us to really sorry, I've accidentally moved the table there and my camera was shaking. It's allowed us to really create new technology that is safer. And this is what I'm really excited about for this Haskell shift for Cardano, right? Haskell is a functional-based programming language. Cardano is what's called object-oriented programming. Now, they work slightly differently in that in Haskell, we actually have to declare what's going to happen before we can start playing with it and say, well, I'm going to start depositing liquidity, withdrawing liquidity, but I've got all these base rules that have to be met in the first place that don't exist in Solidity contracts. Right. This gives us a level of safety checks before you execute the code that's being run, which tends to a safer language. Now, I'm not going to say there can't be bugs. I'm not going to say there can't be issues, but it tends to having, the way that I like to think about it is I think it's going to be very similar to Mac and Microsoft back in the earlier days, where it's just a lot easier to exploit a Microsoft than it is to exploit a Mac.
Yeah, and I think a lot of people have looked at DeFi in general as, it's a burgeoning market. There's a lot of new tech being rolled out and deployed. And within that, there's always going to be security elements that you face in any kind of growing technology ecosystem. And I have talked to quite a few operators from the side of who are developing on the Cardano side of things, especially when you look at Haskell. And security has been one of the key elements. And of course, that's what Charles talks about all the time. He preaches that is the security layer is a completely different animal when you compare it to some of the other, whether it's going Rust or you're going to Solidity, et cetera. That, I think, is going to be an interesting factor in whether or not that's a differentiator in the future, which is going to be interesting to watch. I wanted to touch on a couple of topics. You think it will be? Okay, so I'm with you in the sense that security is going to be huge. It's going to be paramount.
Yeah, it makes perfect sense. Like, I've personally been involved in a rug pull. I've also had friends of mine that have been involved in rug pulls. We watch rug pulls happen at least once or twice a week. And, people can say, oh, well, it's individuals being silly for investing in such risky projects and they shouldn't have put their life savings in there in the first place. You can say that all you like, but at the end of the day, there are individuals taking these actions and they shouldn't have their life savings stolen from them because they haven't been able to effectively read a website correctly. It's just not correct.
Yeah, no doubt. Stephen, I want to get into some of the things that you guys are doing for kind of an expansion with VyFi that I find intriguing, at least because we are going to see, I think, some fairly heavy mass adoption in 2022. 2023, we may see some really accelerated adoption, both in DeFi but in crypto in general. Paying in fiat or cash, you guys are talking about that's a feature coming soon. And then being your own bank. Explain those two elements of how I'm going to be able to utilize cash and potentially VyFi as a bank.
Absolutely. So we've already got our hedge fund, but we're looking at opening that, getting the licensing to open that to the public so that the public can invest inside of our hedge fund. So if you imagine it being like Acorns, I believe it's called Raise in America. Spaceships. There's a lot of those auto investment apps, right? Now, we've realized that there's no real investment app that exists like that for cryptocurrencies. You can do it in major cryptocurrencies, but not for investment tools within crypto. So our auto harvester is a perfect vehicle on which we can onboard people through fiat, and here it is right there. We can see bottom international markets, bottom right-hand side. It might be left-hand side because it's inverted. But essentially, users can deposit their fiat onto our platform, and then we take that and we auto harvest. We send that through our auto harvester, so we do all the crypto stuff for them, and then we just feed them back the yield as fiat. Right. And then, of course, with the bar takes 15%. So we then give that profit back to the holders of our cryptocurrency.
Very cool.
Right. Now, in so doing, that allows be your own bank is a sort of one of those buzzwords in crypto at the
Yeah.
moment. But that allows you to, instead of having the bank manage your savings and do a terrible job of it, you can essentially start taking your own savings into your own control, right? And that includes from a cash perspective, wherein you can manage that in stable, you could literally manage that on stable pools, which means your currency is always being held in US dollar, right? And you're still earning DeFi returns holding US dollar.
Gotcha. Okay, so in essence, you've really replaced the banking system with this kind of model in a way. The question I have, I guess, my last question to you is,
Definitely
when you
savings.
yeah, exactly. When you look at the acceleration of how, and I think most of the people that watch our show, I would call them somewhat sophisticated investors, people that understand cryptocurrency to a certain extent. We do have some people who are new in crypto, but for the most part, a fairly large percentage of our audience is kind of already in that direction. They already understand DeFi to a certain extent, probably have actually transacted within the DeFi space. We're seeing a lot of adoption occurring right now. DeFi is usually going to happen even more so in some of the bearish and/or moderate market conditions. But with that, do you feel, I guess, when do you think that might happen? When do you think we might see real major adoption? You kind of referred to it a little bit earlier in the interview, talking about whether or not people can finally realize the banks are screwing them.
Look, I reckon there's still a few hurdles that we need to pass.
Yeah.
The first is we need to, and I know people hate this word, but it's true, we need to exist on a regulatory level, right? Yeah. Everyone likes to say that fiat is imaginary and fiat only exists in our mind. And to a certain degree, it's true. Fiat does exist in our mind, but it also exists because it's backed by a government that has tanks.
Sure.
Right? Now, that there is a reality to that as well. As long as the government that has tanks says that we have to pay them taxes to live on their land and it has to be paid in their currency, it is more than just an imagination. Now, DeFi to a certain degree and a lot of the protocols on there still exist only in that imaginary sense, right? You need to concrete them to income that exists outside of just the ecosystem that they hold. That's very much something that I've been trying to do, and I'll explain what I mean. Pancake prints its own money and then gives it to its users, right? SushiSwap does the same.
Right.
Now, when you've got a system that just mints its own money and then gives it to its users and assumes it's going to keep growing based on its user base giving themselves money, you run into a mild issue there when you work that out into the long term.
Exactly.
Now, they've adapted mechanisms and burn mechanisms and multiple things to try and manage that mint versus in versus out supply, essentially, right? But that system is still experimental.
Yeah.
Right. What we've really tried to focus on doing is we've only got a limited supply, so no one can ever extend our supply past 450 million. And we've actually tried to build out our farming system as a deflationary token. Right. So there's a natural deflation on our coin. So what I'm trying to posit is, and this is what I'm trying to, back to the original point, I think that these will have the real opportunity to hit mainstream success if we start bringing in principally deflationary systems that people don't envision their money just losing value.
Right.
Right? As long as you can conceptualize that the value for 50, 60, 100 years isn't going to disappear, that's when mainstream adoption can come in. But until I can look at a currency and say, I think it's going to have the same longevity as, in my case, the Australian dollar, or in your case, the US dollar, you can't expect mum and dad to say, I know, I'm going to put my child's college fund in there.
Yeah. Well, and I think that's the thing. We are seeing more and more, even though adoption is really, I would say, considerably advanced this year in 2021. We'll most likely see that pick up with, I think the last number I saw was closing in on 300 million people across the globe that are invested in cryptocurrency and in general DeFi in the markets. If that doubles in 22 to 600 million, what are your thoughts?
I think that we could definitely see in terms of raw numbers growing, yes. In terms of adoption from I would like to see a quadrupling in terms of money in crypto, raw numbers, I would like to see us to be about the same size as the New York Stock Exchange over the next 6 years.
So 6
Right?
years,
That would
you
be
think we're
ideally
there?
what I think
That's
6
a
years
big
is
leap.
possible, yes.
Woo, wow.
That's a big leap,
Yeah,
right?
but it's
if we can
doable.
keep getting, it's doable, right? And if we can keep getting more and more adoption, and this is what's most important, it's about society adopting the technology in its everyday use. And I'm talking about simple things such as using NFTs for tickets at a concert, for example, or something like a Met card. You know, at the moment we have our apps to pay for cards. Why not just create a public transport token, right? And instead, if you hold the token, you're allowed to go on the public transport. Then you have to scan it on the machine, and the machine just takes the token back.
Yeah,
right?
Exactly. Yeah.
Lots of technological things like that being adopted by our society will result in that gap being closed. If we don't see technological adoption, then that gap won't be closed.
Yeah, and I think we've talked about it here on this channel as Web3 is here, the evolution of where blockchain and its infiltration into our society is definitely going to happen. You know, I grew up and, cut my own career in technology at the birth of the internet when I was working with Microsoft, and I saw this happen once before. I've seen the book, this dance is played out before in front of my eyes. And that's really what's happening right now with the amount of innovation. The key here, I think, for a lot of people is understanding who to bet on, because there's so much innovation hitting the market. I think that's the reason, we want to bring light to projects like what you guys are doing, is just giving people an understanding of the real differences between traditional DeFi, what you guys at VyFi are trying to do. I think that's the key with what we're trying to do here on this channel, of course, is educate people.
And thank you so much. That's very much, one of our focuses. And one last thing I'd like to talk about. One of the last pillars, one of the last things that we're really focused on at VyFi is education. So we're building the VyLearn, which is a learning management system that we're offering to all of our users for free. So anyone who deposits into our auto harvester. And that's just going to be a system that I'm going to teach people how to trade. Basically, we're going to map it out so that you have from nothing to basic trading, from nothing to basic DeFi, and then we're also going to include intermediate lessons. Honestly, we're going to try and design it like Khan Academy.
Well, I like that one. If you think about it, the evolution of the financial markets were really built off of education elements. The early traders that were really trying to bring the mass adoption of trading. It's obviously that's why we've seen the rise of things like, Robinhood and all the different trading indices, this do-it-yourself trading apps, and also the feeless aspect of where we've seen this in traditional markets. So I wouldn't, it doesn't surprise me that crypto, and obviously it's one of the reasons our channel does so well, is it's people that are just so hungry and starving for great content, great education, and just information and directing, because this is kind of a wild west right now. So it's going to be fun to watch for sure.
Absolutely.
Hey, listen, good luck to you guys over at VyFi. I think you guys are onto something. I like it a lot. So if you guys want to catch a link and learn more about it, just hit the link below. And of course, thanks so much for Stephen for stopping in.
Feel free to swing by our Telegram or our Discord if you have any questions for us. We're always there to answer.
Excellent. All right, you guys are listening in over on the podcast right now. Make sure and tune in over here on the YouTube channel, because this is the place where you'll catch these interviews, but also you'll see all these graphics that Stephen and I were talking about when you get into things like auto harvesting, understanding DeFi mechanisms and how they really work with how you may be moving into a more advanced investment strategy in your own cryptocurrency life. So make sure and subscribe, hit the like button below. And always, you guys got to join the Diamond Circle. It's free, it's easy to get to. It's where we drop a lot of our information and a lot of our extended trading tactics, along with a lot of our research. Of course, if you want to reach me, you can do it out on Twitter @PaulBaron. We'll catch you next time right here on TechPath.